Okay, right. We don't use the yeah. Okay, so we're live. We're live, we're live, we're live, we're live. We're live. Share, 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 share. Invite, 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 share, share. So very quickly, we are going to look at how we took this Euro USD sell yesterday. And we follow the same principle, the same um, process. Okay, but before we go into that, this is a good 1 to 10. Wow, that's nice. Our affirmations, right? What you want to see in your trade. I see myself consistent. I see myself disciplined. I see myself patient. I see myself as a resilient trader. I am consistently profitable trader. I am a disciplined trader. I am a patient trader. I am a resilient trader. Right? These are the things I want to see. Okay, so we are going to break down Euro USD sell before we go into what we have for today. So very quickly, this is the sell that we took on Euro USD. Very clean and clear. Very clean and clear. Okay, so how were we able to predict this sell, and how can we repeat this? Because the beauty is not just to predict and have one win, right? Yeah, it's for us to consistently have the wins. That's the beauty. To consistently have the wins. How can you consistently predict this win? Okay. Okay. If you know the numbers, you can grow the numbers. If you know what you did to make you successful, you can repeat that same thing. So EU, sell, CPE. Right. Okay. So let's do a quick recap. So first of all, what we want to do is every single day, your routine is to know the previous day high, low, and close price. That's what we did on Monday. Okay. Write this in the chat box. Previous day high, previous day high, low, and close. Previous day high, low, and close. This is your first go-to, and this is not strategy. This is the concept of the market. You need to know you are a day trader, right? So you need to know the price, the close price, the high price, and the lowest price on the previous day. What does this help you do? Why should you care about marking out your previous day high, low, and close? For buyers to know to have a bias for the next day, bias for the next day. This is what direction. So the reason why you care about always, I mean always identifying your previous day high, low, and close is because of you want to know the bias for the next day, which is direction. So this is why the previous day high, low, and close is important. Like I said in the mentorship yesterday, for every concept you are using, We want to know, why should I care about using this concept? What's it going to do for me? Why? Why should I use this? Why should I use that? Why should I use this? Why should I use that? So the reason why we are paying attention to previous days high, low, and close is to get the bias, the sentiment for the day, right? That's the reason why we are using the previous day high, low, and close. Previous day high, low, and close. Okay? If you can hear me, type in previous day high, low, and close in the chat box. If you can hear me, type in previous day high, low, and close in the chat box. Okay, let me see. So here. Let me see. So here. Type in previously I, low, and close. Previously I, previously I. Okay, I mean on the YouTube live. You're typing in the. Okay, David. Okay, alright, right. So that was what we did yesterday. So let's go back to our charts for your yesterday. So I'm going to delete everything here and do it again as if we are going to trade Monday. So let me take off everything. So I go to my daily charts. Yeah, thank you, Igor Francis. I go to my daily chart. So your step one is go to daily charts. So let's write it to me on the chat box. We're going to work together today. Step one, go to daily charts. Step one, go to daily charts. And what are you doing on daily charts? On daily charts, you are marking your previous day high, low, and close. Step one, go to your daily chart. To do what? To mark the previous day high, previous day low, previous day close. Why? To know the bias for the next day. So example now is, I'm showing you how we caught this sell for yesterday. This sell, I knew this was going to sell, not because I am a prophet or because I am an angel. I just follow the market's behavior. So Friday closed bullish. Friday closed bullish. What do? We mark Friday's high, Friday's low, and Friday's close. That's step one. Step one is to what? Mark the previous day's high. Follow me. Mark the previous day's high. That's PDH. You mark the previous day's low. That's your PDL. PDL. And you mark your previous day's close. That's your PDC. How hard is that? Very simple. Step one, go to your daily charts and mark your previous day high, previous day low, previous day. That's step one. Right? PDC. What is step two? Step two is go to your 15 minutes and identify the structure. So the idea is we are moving from our candlestick price action on daily to 15 minutes structure to now enter your trade. So we have just two steps. Step one is daily to mark the bias as a direction. Step two, drop down to 15 minutes for your location and confirmation. So this is step one. Done. I go to my 15 minutes. So let me screenshot this. Let me write this and screenshot for the sake of note taking. Yeah. the sake of note taking. So this is step 1. Step 1. What is step 1? Daily, go to daily time frame. Mark previous day high, previous day low, previous day close. Simple. And like I was sharing my guys, this is not the strategy. This is the market behavior. This is not strategy. This is how the market behaves. This is not the strategy. Showing you the market pattern, right? Step 1, go to daily time frame, mark previous day high, previous day close. Yeah. Okay. Right. So step 2, go to 15 minutes to identify your structure, your location, and your confirmation. That will be step 2. Right. So let's go to 15 minutes now. On 15 minutes, so we have, can you see how price behave? So our idea is, so 15 minutes, we are going to now implement our session. Okay. We have to on our session indicator because it helps us to know the session range. That's your liquidity grabs and targets. That's what I own my session for. One, sessions help me to know my range and help me to know the target. So I knew so well that if I'm selling from this Asian range into London, I'm targeting the next Asian low, which conflicts with my previous day low. Can you see Asian low here? That's the target. So if I'm selling from Asian low, if price has taken out Asian low, right, and my next take profit is the next Asian low, and it's confirmed and confluenced with previous day low for profit making. You see that now? That gives you the edge. So, but my point is, what it comes to 15 minutes to do is to now look at the structure. Look at the structure. Let me shift this to the normal day. Let's give me a minute, please. Let me adjust this. Previous day high. Okay. Adjust it to today, to yesterday, rather. Okay. Previous day close. Adjust. Previous day low. Adjust. So I'm adjusting them to fit in the range of Friday and Monday. I want this high both on low to fit in the range of Monday's close. Right, that's it. Just adjust to fit. Adjust to what? To fit. Now, what do you observe? What do you notice? Now, the rule is that if price is trading above the previous day close, just follow me carefully. The rule is that if price is trading above previous day close, they are expected to be bullish. This is general rule of thoughts. General rule of thoughts. Price above PDC, bullish. Price below PDC, bearish. This is the general rule of thought. Can someone type in the chat box? Price above PDC, bullish. Price below PDC, bearish. General rule of thought. Price above. That means if price closes at 2 naira today, and the next day we find price trading above 2 naira, it means that that day is most likely going to be a bullish day because price is now trading above the what 2 naira. If price is trading below the close with a momentum and a structure, it means price is going to be bearish for that day. The only caveat here is that sometimes price will trade above previous day close as manipulation to now what distribute. That happens when there is no break of structure above the previous day close. For example, when market opened on Monday, price went above previous day close, but did not break structure to the upside. They don't give us a new high. That's the only time that this above PDC will be a manipulation. Okay, above PDC can be a manipulation if there is no break of structure, just like in yesterday's case rather. Price opened and started trading above. Can you see this PDC? And these candlesticks are above. So price opened the Asian section and started trading above. But this guy has not given us a bullish sentiment until we have a new high. Then we can say, okay, oh, price wants to do. But when price went up, it came down and broke structure. Can you see? So price, instead of breaking structure upside, price broke structure downside. So that means that exactly that means that the price that went up PDC was a manipulation. The real market broke structure to the downside and price retraced to respect this other block on 30 minutes. That was the beginning of the drop. Okay. And in mentorship, we talk about 6 o'clock, 6:30 pre-London liquidity. We can discuss that now. In the mentorship, we break them down. We have pre-London liquidity that happens from 6:30 to 8 o'clock. And that's what exactly. So 1 o'clock candlestick created the volume like an order block supply kind of volume for that 6 o'clock 6:30 to London liquidity, and that was where the sell started from. So this is not a class. If you want to get deep knowledge or understanding, you gotta join the mentorship. We have a mentorship where we break it down. So we are just doing analysis here. If you want to have a breakdown knowledge of this, join the mentorship. Join the mentorship. So we have this sell yesterday, and voila, our target is the previous day low. Right? That's the confidence we have. So we repeat this every other day. The first job for us is we mark previous day high and close, high low close. We drop down to 15 minutes to see the structure and location and confirmation. All right. So if that's clear, type in clear. Even if you may not understand everything, but it's clear. From this explanation, okay. So let's go to what we have today. So what are we expecting today? We repeat the same thing. if you made profit from the market doing a particular thing, it's most likely that thing you did was right. You follow the process. So this was the process you followed to make this profit. The wise thing to do is what? Follow that process again. So let's go again. Go to daily time frame. Oh, sorry, I didn't do step two. So I said for step two, what do we do? Go to 15 minutes. For step two, go to 15 minutes. 15 minutes to do what? Structure liquidity. So 15 minutes for what? We want to know our structure with liquidity. Okay, which give us a refined direction. We want to know the location we are buying from. We want to know our key level, which is location. Key level could be order block, it could be fair value gap, and all that. And we want to know, get our confirmation, our entry, all on 15 minutes. So 15 minutes, we have structure plus liquidity, key levels, and confirmation. Okay, so this is just the breakdown. More details in the mentorship. Oh. More details in the what mentorship. Okay, so let's go to the next day, which is today. So I go back to my daily time frame. I go back to my daily time frame to do what? To mark the previous day high, low, and close. Previous day's high, low, and close. Previous day's high, low, and close. Yeah. So because those bearish, our close price is going to be below. For a bearish candle, the close price is below. For a bullish candle, the close price is above. Right? For a bearish candle, the close price is below. For a bullish candle, the close price is above. So step one is done. Step one is done. Step one is done. Step one is done. So step two, we go to 15 minutes. Step one is Done. So on 15 minutes, let's look at the structure, the liquidity, the key levels, and all of that. Okay, so I will on my indicator, my Asian session range. I want to know how the market is ranging. I want to know the session range and all of that. So let me adjust this to let me adjust this to Tuesday, Tuesday close. Yeah, adjust this to Tuesday close. Adjust this to Tuesday. Yeah, good. All right. So we are in step two. Let me on my Asian range. So now what do? We have seen that Asian has given us its own range. And look at the price action that happened. When market opened, what were we doing? We started above the previous day close. Okay. We now came below the previous day close, breaking structure. Right? Now we are now back above and below. So we are still going above, below, above, below, above, below. So my confirmation for a sell now is I want to see price come again to trade below the close. Once I see a candlestick again below the close, I take a sell. So we have a break of structure and we have a close. So the next one I want to see candlestick confirmation to break and close below. Yeah. I want to see candlestick confirmation to break and close below. Once I see candlestick confirmation, break and close below, I sell. Okay. And my next take profits, I'm targeting the what? The next liquidity target, which is New York low. New York low is my next liquidity target. It's very clear. Okay, so clear. So this is what I'm expecting, right? So beyond this New York low, my next target for liquidity is, let me expand this to 30 minutes. My next target for liquidity after the New York low is the next low. So this is my next target for liquidity as take profit here. So those are my targets for take profits. So I'm still bearish on Euro USD until further notice. I'm still bearish on USD until what? Further notice. Right? So I'm going to give us updates on the group. Like I said, I'm expecting candlestick to close again on 15 minutes. Give me a confirmation candle close outside the previous day close. Once that happens, I sell to this guy. Yeah. So this is Euro USD setup. Okay, so that will be all for Euro USD. You can use this to apply on other charts because of time. Let's go to gold. Let's see what gold is doing. Gold printed a good price action this morning, a very good price action this morning. I'll explain. I'll just give us a cheat code. I won't go much into the because of time. Now that gold has always been consistent. Break of structure. Gold always love to do this. Before a break of structure, you see price first sweep the low, break structure, then price comes to the origin of order block and what we buy to take out this target. So this is the pattern for this is a buy scenario. I want you to take note of this pattern. I'm going to label it. Okay. There is a sweep before a break of structure. There is a sweep before a break of structure. There will usually be a sweep, then a break of structure, then price retraces back into the origin order block, takes out inducements internally, and retraces towards the order block, OB. Order block, order block, order block, order block. Let me use 15 minutes order block. Let me get in. Okay. So whether it's daily or whatever it is, so price retraces to the order block and targets what this take profit. So this is a pattern to watch out for on gold. And I'll show you how it played out this morning. It played out just this morning. Sweep, break of structure, retraces back to order block, taking out inducements before coming to the other block. Yeah. Then boom. Okay. Um yeah, let's move. So this is the pattern. Are you seeing me? Oh sorry. Right? So this is the pattern. Buy scenario. Okay, so for a buy scenario, that's the pattern we want to expect. So we want to expect to see a sweep, a sweep, a break of structure, price retracing back into the order block. Okay, then targets the eye. So let's see how that played out on gold. Let's see how this played out on gold. Okay, let's see how this played out on gold. So look at this carefully. So step one. mm, Step one, we have a sweep. Step two, we have a break of structure. Okay. Now there's a rule in market structure or market that a week on a higher time frame is an order block on a lower time frame. Write that down. A week on a higher time frame is an order block on a lower time frame. I've said this times and times and times and times again. A week on a higher time frame is what? An order block on a lower time frame. I repeat, a week on a higher time frame is what? An order block on a lower time frame. This is the market's behavior. It's not me that said it. It's how the market has behaved in patterns and consistency. So this week on 4 hours, if you drop down to a 15 minutes, you will see an order block that this guy respected. So let me first screenshot this and send it to you guys. So I love details, taking it step by step. A week on a higher time frame is an order block on a lower time frame. So let me give an example here. So I would say 4 hour week, 4 hour week equals to 15 minutes order block. That's an example. So you can see that this is what we are talking about. Are we together? 4 hours week equals to 15 minutes order block. So like I said, what we do every morning here is not class. If you want a proper class, for those that are just joining, you got to join the mentorship. That's where you break down everything into it. So what we just do here is purely analysis, breaking down the market. So if you want to get deep understanding, of course, join the mentorship. So just send me a message. We are still doing our discounts. Our baby discount is still on, so you can take advantage of the baby discounts. Because usually the mentorship fee is $200, but we are having a discount of $29, which will never happen again because it's my birthday this month. So after August, next month, we are back to $200 for mentorship. The best I can do is give you installments. There's no discount for that one when we are coming back to the normal mentorship because this is not a course. For those that have been with us for a while, you know that we are not giving you bills. Okay, so it's a hold you by the hand kind of mentorship. I'm saying this 2 times. Oh, sorry. I'm saying this 300 days. So are we together? So you get more insights. Well, so let me drop that now. Let me drop that now. Let me drop. We have a general group. I'll drop the link general group. You can join the general group, and I will drop my number if you are just joining from someone. Um, Sorry. Um, uh, So this is the link to the this is our general group, the 100 days, right? and my number. Okay. Yeah. So reach out to get deep breakdown of what we do. So continue from where we stop. So let's mark out the week and see how this play out. This is just today. And there's a concept about CRT. I don't go into much details. This is CRT playing out right now. CRT. But let me not go there. Right. Let's stay basic. CRT is an advanced advanced strategy edge. Right. I don't like giving beginners CRT. When you come to the community, we show you how to use CRT. So general knowledge, I give you market structure and all that. So 4 hours per week, right? This is a pullback. Let's see why this guy dipped into this place. Every move in the market is intentional. My status, I dropped down my status was not yesterday. That the market is not does not have is not a costless. There are no costless effect on the market. Every move is driven by the institutions. So what makes this guy dip into this place is the 15 minutes order block. So let's go to 15 minutes. That's what I mean. So on 15 minutes, you can see that that week on 4 hours, this entire rectangle candle is the 4 hours week, right? Look carefully at the origin. What do we see here? Order block, 15 minutes order block. You see what I'm saying? At the origin, at this origin, so we are refining this towards the 15 minutes order block. Can you see how precise this market is? Nothing is random here, guys. Everything is intentional. Now, I just mentioned a pattern that we saw on higher time frame. The same pattern is playing out. Sweep, break of structure, pull back to another week. And this week on 15 minutes is a 5 minutes order block. So market is fractal. The same thing as it is on the higher time frame, so it is on the lower time frame. So it means a 15 minutes week can give us a 5 minutes order block. You see it now. A 4 hours week gave us a 15 minutes order block. I repeat, we just saw how a 4 hour week gave us what? 15 minutes what? Order block. Now we are seeing a 15 minutes week. Let's drop down to 5 minutes. You will see that this is giving us a 5 minutes order block. Let's go. Let's see. 5 minutes week. So I'm getting all these deducement from the market behavior. It's not me. It's not me. It's what the market is doing that is making me deduce these beliefs. All right. So that is it. And if you are entering your buy from here, where should be your first take profits? If you are entering your buy from here, where should be your first take profits? Your first take profit is at the opposite order block, which is here. You can see drop, base, drop. We have a opposite order block resting here. That's your first take profit. Price wants to rest. Price will love to rest and relax. Price moves from target to target, from intention to intention, from demand to supply, from high to low, from support to resistance. So from order block to what? Order block. From a bullish order block targeting a bearish order block. Retracing to a bullish order block targeting a bearish order block. So this alone was a 1 to 7. This happened just this morning. Just this morning. First buy. Okay. Now the second buy is now On 15 minutes, if you miss this first buy, this impulse, no problem. Don't chase price. You see another sweep and what? Break. That is your direction. Sweep into the other block and what? A break of structure, giving you a higher high. That is what you need to see for a direction. A sweep and a break equals direction. Type on the chat box, everybody. A sweep and a break equals direction. A sweep and a break equals direction. A sweep and a break of structure equals direction. A sweep and a break of structure equals direction. Sweep plus BOC equal to direction. Everybody. Sweep plus BOC equals to what? Direction. Type. I'm wrapping up here. A sweep plus a break of structure equals to what? Direction. Type. Okay? Whether it's uptrend or downtrend. A sweep plus break of structure equals to what? Direction. Where can I put this now for it to be? Okay, here is okay. Let me just do a sweep plus a break of structure equals to what? Direction. That's the pattern there. So I have a sweep of liquidity and we have a break of structure. This pattern gives you what? Direction. Let me screenshot this. Send to us. Sweep plus BOC equals direction. Are we catching it? Sweep plus BOC equals direction. Okay, someone is requesting to me. Yeah. Okay. Just continue. All right. So after the direction, the next is we want to know a location. That means we have gotten a direction that we are going up. That's the first thing. The next thing is, so where are we buying from? We now know that we are in an uptrend because we have broken structure to the upside. And I have said it just now that a week on a higher time frame is an order block on a what? Lower time frame. And 15 minutes has given us this long week. Okay, 15 minutes has given us this long week. This is our swing low and swing high. So what I'll just do is I'm going to mark the week from the top to the bottom, extend it, and go to my lower time frame of 5 minutes. And let's see the magic. Because I want price to retrace. After a breakout, I expect to see a pullback. These are little things that we should understand in market structure. Market structure have two characteristics. We have the breakout and we have the pullback. Pullback. You can type this on the chat box also. Breakout and pullback. Breakout and pullback. Market structure will break out, give you a break of structure, and we always pull back. So if there's no pullback, you are not interested. We break out, that's a break of structure. We expect a pullback. Pullback to where? Pullback to our key levels. And these key levels are the order block, the fair value gap, the demand and supply, and also the Fibonacci retracement. This is consistent till Jesus come. Your key levels no dey change. Either you are using order block or you are using Fibonacci retracement or you are using demand and supply or you are using other any of this, okay, it's fine. So breakout and pullback, breakout and pullback, breakout and pullback, breakout and pullback. So let's go to 5 minutes to see the pullback that happened. You can see carefully the pullback happened into the 5 minute order block. This can't be a coincidence. That you're having a game, a week on a 15 minutes, giving you a what? A an order block on the lower time frame. So again, we target our buy here. Okay, our first take profit will be this high, and that has given us a 1 to 2, 1 to 1.7. Okay, it's not to 1 to 2 to this high, but if we use a Fibonacci retracement, Fibonacci extension from year to year, you can trust that price will get to at least the 27%, which is 1 to 2. Okay, or at the left, we have an order block here, which is your take profit. So whichever way, we are still in this buy. I'm still in this buy position. We are still in this buy position. We are still expecting this guy to still move ahead because our TP is actually going to be above this guy. Ultimately, we are expecting to get to 61.8 extension level. Ultimately, ultimately. Okay. So what we have currently now is, let's see what price is current. So let's say you missed all this move. How can you join the move? Now we have a new break of structure. How can you join the move? How can you join the move? We have a new break of structure. Okay, let's delete all these ones. All these ones have happened. This one is past. How can you join the move now? Okay, look at the structure. This is the higher low that created the what? Higher high. Is this a sweep? Yes. Break of structure? Yes. And price is first back to this. Okay. So we have the same thing here again. We have the same thing happening here again. Internal break of structure. Internal break of structure. The sweep. The same pattern is happening right here, and we are at this demand zone. Okay, so this is the so our first buy position re-entry. Okay, our first buy position re-entry. Our first buy position. If this does not work, then we expect price to use the Fibonacci 61.8. Okay, let me get in my buy position. So I'm also buying. I'm also buying. I'm also buying gold. So I'm not saying what I'm not doing. Gold. Where are you? So two things. Either use the Fibonacci 61.8. Okay, it's almost it is not 8 yet. So let me wait. Let me wait. Let me go to my 1 hour CRT. Let me apply CRT for a confirmation before I enter it by. Let me see what my 1 hour is doing based on my CRT. Because gold, you have to be very careful on gold before you take a decision to buy or sell. So for me, I'm going to wait for my CRT candle. There's what we call CRT candle that we use. So I know price has respected this guy already. I've gotten in a week. So I want to see price give me a CRT confirmation. So I'll just hold on. Okay, I'll hold on. Before I buy, I want to see a CRT confirmation. I've not seen anything yet. I want to make me buy. Okay. CRT will mean that I want to see a red candle that, for example, now this is 6 o'clock candle. Okay. If we close, if price closes with this sweep, it means that they're targeting the candle range high. This candle range is already. If price closes this way with a sweep, it means that they are targeting at least this high. That's what it means. So I'm patient to see how this guy will close. All right. I'm patient to see how this guy will close. I can as well be on 1 minute to have an aggressive buy. So let me send this to the group. So we are currently forming a sweep on 1 hour. There's a high chance that this guy is going to buy and take out the high. There's a very, 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 very high chance. There's a very, 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 very high chance. So 1 hour CLT forming. Okay, so let me be on. Okay, it's 8 o'clock. Let me be on 1 minute. It's 8 o'clock. It's 8 o'clock. Confirm. So I'm going to see my first buy is here. My second buy will be price to come back to this other block. Okay, so let me enter a risk buy. I'll not use my main, I'll reduce my risk. This first buy. I'll reduce my risk with this first buy because my stop loss has to be below the liquidity. If I'm buying from here, my stop loss has to be below the liquidity, which is this. So the stop loss is that. Yeah, you want me to talk? I'm not live. Oh, okay. Okay, can you see? It's coming back. So the other block here would have been a good buy limit. Yeah. Stop loss here. Then take profit at the candle range high. So let's see how this plays out. Let's watch. Let's watch. Let's watch. Let's watch. 334. 3335. 333.47. Okay, can you see that we are going up now? So now I can now use my main risk now. I can use my main risk now. 0.1, 0.1. 0.1, 334. Okay. Stop loss is at 3334.47. Okay, let's see how it goes. So that's it. Let's see how our Euro USD is doing. Wow. So Euro USD has gone above. Okay. EU has taken out this high. Has taken out this high. So let's term this as liquidity first because the structure is still bearish. The structure is still bearish. So let's see if this guy comes back and closes, then we start selling. So we're still patient for what USD is doing. You can't conclude here that we are bullish. Okay. Structure is still bearish. Okay, so that's all for today. I'll send updates on the group on what gold and USD is doing. I'll give us updates. I'm bullish on gold. I'm bullish on gold. I'm bullish on gold. I'm bullish on gold. Gold is already printing. It's a good buy. It's a good buy. Still good. Yes, it's on the class. So the notes. Just now, just in 1 minute. Yes, now. You didn't take the grade, have you? I took a 1 minute. Took a, I took him. I don't go to come. Took him. I can't be giving signal. I'm not taking it now. All right, so we are running in profit. Ready? So let's see how it goes. So we follow the same principle every other time. Every other time. Same. Yeah, I'll leave you. Okay, so that'll be it for you guys. See you tomorrow, same station. Once again, um, join the link, join our group for job updates, job setups, and reach out to me for mentorship. Reach out to me for mentorship. All right. Okay.